Hello, everybody. Hey, it is John Lone King. It is Friday, the 13th of March, the second Friday the 13th in a row. And it has been a crazy ride between last Friday the 13th and today. So I'm going to cover all of it with you and kind of help fill you in on what's happening and why and what it's going to mean. So first and foremost, oil prices are the name of the game right now. Oil is driving inflation. So I'm going to back up and kind of give you a bigger picture. I know everybody's paying attention. You know what's happening in the Middle East. I want to be really clear. Some of the things I'm going to say are going to be about the people in charge here in the United States. I'm not going to share with you my opinion. I don't want you to share with me your opinion. I'm simply speaking factual about what's happening and where it's leading. So what we've got right now is we've got the current administration has decided, hey, they're going to make some changes in different parts of the world. And they successfully went into Venezuela and they took out the president there in a quick, short operation. And now they're out of there. And they have a new government that's running Venezuela that is cooperative and everything's good. And then they went into Iran to do the same thing. And the idea was that, hey, and this is everything I'm reading, okay, I have no special knowledge, but the idea is, hey, we're going to go in there, we're going to take out the leadership, and then we'll get some people that cooperate with us who are going to take over, and everything is going to be okay. That hasn't happened. And what's happening now is Iran understands the stranglehold that it has on oil. So Iran is a very big oil producing nation, but more importantly, they actually have one of the most important waterways for transporting oil in the world, and the Strait of Hormuz, and they're basically stopping ships from going through there. So Iran is blowing up the oil tank or oil producing factories, pumps for other nations in the area. And obviously we've got Israel who's blowing up the ones in Iran. What this is creating is a major long-term problem. It's like being in a fight with your neighbor in your, over the fence and saying, hey, who's going to build the fence? Where are we going to move the fence? How are we going to repair the fence? And you're fighting with your neighbor. And the idea is, you know what? I'm tired of that neighbor. I am going to set fire to every house in the neighborhood. Well, that's a pretty big problem. Like you've created a bigger problem. Maybe a better example is I am going to tear down all the electrical lines for the entire neighborhood just to get back at my neighbor. Well, that's awesome. You got back at your neighbor, but you also ruined stuff for yourself and for everybody else because Iran has decided they're going to destroy the oil infrastructure and block the movement of oil. Again, I'm not taking sides here. I'm not saying who's right or wrong. I'm talking about what it means to the economy, what it means to the market, the stock market, the interest rate market. That's what I'm focused on right now. All of those things are happening in one very simple outcome. The price of oil is highly volatile and it's going up significantly. Why does that matter? Because oil is driving inflation. And with inflationary risks building, the question is it short-term or long-term inflation? It's very similar to early in 2022, late 2021, early 2022, when we had supply chain issues. COVID caused us to have a shortage in chips. And that shortage in chips meant that there weren't enough products being built. There were shipping issues and you couldn't get stuff from China to the United States. And so that created supply chain issues. Then you had an issue, one of the canals, the Suez Canal, maybe you had an issue where you couldn't transit, they couldn't get ships through there. And so that created more supply chain backups. And the Federal Reserve made a mistake and said, this is transitory inflation. It's only going to last for a short period of time. It's no big deal. This inflation is going to come right back down as soon as we fix this supply chain issue. It didn't. Therefore, the Federal Reserve didn't raise rates a little bit as the medicine for that inflation. They kept rates where they were, and the inflation got worse. It is the same as when you have an infection. You go to the doctor, you have an infection. The doctor says, you know what? You should take these pills and get rid of the infection. And you're like, yeah. Nah, I think I'm fine. I'm not going to take the pills. Then the infection gets a whole lot worse. Inflation is the same kind of thing. If we don't nip inflation in the bud right away, if it's short-term, transitory, no big deal. There was nothing it's like, no, doc, I got a cough. Like, it's just a normal cough. I don't have any kind of bug. I don't need any antibiotics. Well, maybe you're right. Maybe it is just a short-term bug. Maybe it's a major long-term issue. Or maybe it's an infection that could create even bigger long-term issues. So we saw this happen in 2022. We saw that's what caused interest rates to skyrocket. Now we're dealing with inflation pressure going up specifically because of oil prices. but this doesn't feel transitory. It doesn't feel short term, because if they destroy the ability to produce oil, it's a longer term problem. Oil is used, excuse me, in every single good and service that you, goods at least, that you consume. Oil has something to do with it. Whether it is the production of it and the manufacturing plant that produced it uses oil as an energy source, or whether it is the transportation of it moving from one location to another, oil impacts everything. And so the price of oil isn't just inflation at the gas tank. It's not inflation at the gas station. It's inflation everywhere. It's inflation at the grocery store, because it's going to cost more money for the grocery store to ship those goods from the warehouse to your house, or to the grocery store. So this is a major inflationary concern, and it appears that it's going to be a longer sustained issue, because they're destroying infrastructure. They're damaging ships that are going near the Strait of Hormuz there in Iran. So this is creating a longer term problem, and that puts mortgage rates at risk. By the way, I'm always open to questions or comments, and here is a howdy. So howdy, thank you for the comments. If you guys have questions, feel free to post them. If you just want to say hi, feel free to say hi. All right, so mortgages are at risk. We saw 2 weeks ago the news saying mortgage rates are the lowest that they've been in over a year. Rates are in below 6%. Blammo, they're gone. They're gone. They don't exist anymore. Rates are 6.25% to 6.5% on average. Why? Because of inflation, because of oil. I talked last week about unemployment being a thing that, hey, there's some more job loss than we expected. That's a minor issue compared to the inflation issue. We've already got people in the Federal Reserve saying, I think rates should go up anyway. And now this gives them even more ammunition to potentially not lower rates, not keep rates the same when they meet, but raise interest rates. So this can create a major hurdle, a major roadblock, because oil, in the price of oil, translating to inflation, is going to drive up the 10-year Treasury bill, or 10-year Treasury bond, and we've seen it go up significantly already. I'm actually going to show you a chart right now that is going to show you what the 10-year is doing. So let's share my screen, and I'll show you what's happened over the last couple of weeks right here. There we go. Sharing. All right. And let's make this little guy go away. Are you going to go away for me? It doesn't really matter, because I need you right here. So what we are seeing, let's make this a little bit better so you can see it a little bit easier. Let's go here. Here. There we go. All right. So what you're seeing right here is you're seeing from March 11th, and we had the 10-year Treasury that was at about 4.25%. And then we saw the 10-year Treasury drop. What the heck just happened to my page? What are you doing? No. That's bad. All right. Let's see here. Let's stop.
Important security message.
Stop it.
Your computer has been locked up.
I'm going to stop sharing.
Your IP address was used without
remove. Okay. So basically, let's
identity theft virus.
We saw the 10-year Treasury.
To unlock the computer, please call support immediately. Please do not attempt to shut down or restart your computer. Doing that may lead to data loss and identity theft. The computer lock is aimed to stop illegal activity. Please call our support immediately. Important security message. Your computer has been locked up. Your IP address was used without your knowledge or consent to visit websites that contains identity theft virus. To unlock the computer, please call support immediately. Please do not attempt to.
What we're dealing with is inflation that has been pushing up interest rates. It's been causing problems with the oil, and the housing market is going to be a wild card. We are concerned. I am concerned about where the housing market is going to go this spring, because with rates near the 6% mark and getting below 6%, we had a lot of buyer activity. Okay, we've got some good spring market momentum that's happening right now. The problem, and we see demand improving quietly. Problem is, all those numbers are lagging indicators. Those are indicators that might be a month or two behind, and we're right now dealing with inflation that is taking off in the last 2 weeks. All right. Yes, thank you. I just appreciate you letting me know that was still going on. So we got rid of it. Perfect. All right. So why does this all matter? because what you're hearing in the news about the market, what you're hearing in the news about interest rates, it's old news. The rates move every single day like gas prices do. So the easiest way to think about it is you pay more at the pump, you pay more on the interest rate on your mortgage. That's not an exact correlation, but that's a really good thing to be planning for, a really good thing to think about as you're looking at mortgage rates right now. We still have tight inventory. Okay, we don't have a lot of homes listed for sale. That will keep house prices from dropping, but without having enough buyers, we don't see prices necessarily taking off either. And so really what we've got is we've got a situation where rates are going to control the market and energy prices are really going to be what's driving housing right now. So what is happening with energy is going to be the issue, and it's all about what's happening in the Middle East. So that's going to be driving the narrative. That's going to decide what direction that the housing market is going. And so we really need to be cautious when we're thinking about where are interest rates going to go next and what should you be doing. So right now, what I'll tell you is I've got multiple people looking at refinancing because they heard rates have dropped. We're in really, really good shape. Well, rates have skyrocketed again. Now, skyrocket, that's a relative term. But for a lot of people, the simple answer is if you like it, lock it. Don't wait and hope it's going to drop more. If the numbers work, pull the trigger. If they don't work, then set a target and pull the trigger then. But if you're buying a home, you don't have that flexibility because you have to find the right home. And so the advice, I was just talking to somebody this morning and talking about this, and I said, look, we are in an environment where a lot of buyers are going to be scared. Buyers are going to be pulling back. We know the trend is rates are going down. Now we've got a big wild card with this oil issue, and that could cause rates to stay higher longer. Could be a couple of years that we see higher interest rates. It's hard to say. But what I can say is that if you find the right home now, you're not going to be in as much competition. You're not going to have as many people that you are competing with to get an offer accepted. And so in that regard, it's going to give you a leg up if you're willing to stick out with that interest rate and that payment for a longer period of time. The days of marry the house and date the rate, those are over. Like don't ever buy a house thinking, oh, rates are going to fall. I'm going to be able to refinance. This is a temporary thing. It is not temporary. Okay. We're going on 4 years now of interest rates staying elevated when everybody thought it was going to be temporary. So your thinking has to be surrounded around what can I afford? But affordability sometimes requires you having a shift in thinking. It sometimes says, hey, owning a home, that's a light switch. I either own a home or I don't. Investing money in the 401k, that's a volume knob that you can turn down. So maybe you turn down the volume knob on your 401k investing for now. And then as your income goes up, you can turn up that volume knob. As interest rates come down and you can refinance the house, you can turn up the 401k volume knob, but you can't control interest rates. And so owning a home, on-off switch. Investing, putting money into your 401k, putting money into other savings accounts, that's a volume knob that you can adjust. And that's the way I want you to be thinking about it. So I really appreciate you all joining me today. Sorry for my technical difficulties on that website. But bottom line is it is spring. It is the home buying market. It is the time buyers are supposed to be coming out, and buyers are getting scared about interest rates right now. The funny thing is people were feeling okay with 6.5% interest rates. And then when they fall to below 6, and everybody's like, oh, that's what I expect. And then they jump back up to 6.25 to 6.5, and people freak out. Well, it's still better than what it was when it was 6.5, but it's stability that people are looking for. Volatility is the unknown. If it keeps doing this, it could go even higher. That's what people are afraid of. And that opens up an opportunity for you if you're willing to take the leap in becoming a homeowner, not knowing for sure exactly where interest rates are going to be. Appreciate you all listening. Have an absolutely wonderful day, and we'll talk to y'all soon. Bye-bye.